How are you guys doing? Today is lesson 36, the investor mindset. This may be the only video I actually have where there's probably no or very little charting, which is totally fine. I just want to cover some extra stuff when it comes to risk versus reward with this one and our next lesson. The reason is you may be one of the best traders ever, which you could be, who knows, right? You could be really, really good even for yourself. Just getting better every single day is really important. But if your actions outside the stock market don't align well with saving money and even using your money correctly, then why bother? I mean, I think there's some argument to be made that the stock market could be a really great place for you guys to have extra money to then live better and have really good lifestyles, and maybe it helps fund a bigger house that you wanted or a better car that you wanted. That's all well and good within reason. I think if you spend more than you make in the first place, well, then why are you in the stock market in the first place? You're supposed to be fiscally responsible to some extent. And that's what we're going to talk about today, is how you can properly manage money outside the stock market and how you can probably be more successful in life. I'm not going to be giving you financial advice by any means. I'm just going to go over some great points that books that I've read have made. I want to kind of further this point of risk management and mental analysis, and that if you can modify the way you live a bit, maybe it's seeping into your stock market trading or vice versa. If you're a really good stock trader because you know value when you see it, well, then wouldn't you go shopping and buy stuff and rent stuff and buy liabilities and assets based off that as well? And if you are really good with personal finance, maybe then you're going to see in the stock market, you understand that better as well. So I want to kind of just talk about some great points that I've made, but I want to kind of harp on a bit more. This is all information you can find on YouTube and Google, but again, if you don't know the questions to ask, how do you find it? So that's what we're going to answer here today. Firstly, we're going to talk about what kind of money do you have and what kind of income do you want. There's 4 different basic types we'll talk about today, all from Robert Kiyosaki, and what he talks about with what kind of job you can have or create. We'll discuss that first today. Then we're going to discuss what kind of income do you want from the stock market. Do you want growth, active, dividend? What kind of stock market money do you want to achieve? And we'll talk about goal setting soon. But if you don't identify what kind of stocks you want to target in the first place, then what kind of direction do you have? Goal setting is major. We'll discuss that briefly today. We're also going to discuss what kind of passive income do you want to eventually establish. The reason I want to talk about this is that I think a lot of folks have really good trading systems and trading structures, but as all of the folks I talk to discuss, long-term investment is very different. And I think most folks want to get in the stock market to leave their job to some extent or to supplement their income. You're not going to be doing this when you're 85, 90 years old, and there's a good chance you're going to live that long. Let's establish how you can get long-term investments and some passive income as well, and just make that topic known as what your final goal wants to be, and discuss that today as well. We're also going to discuss assets, liabilities, cash flow, income, and expenses. Again, not financial advice. I don't know your guys' situation, but these are the 6 words I focus on all my students in real life and online. Do you know what an asset is? Do you know what a liability is? Do you know what income is? Do you know what expenses are? Do you know how to manage cash flow? If you know those 6 things, again, you can apply that to the stock market, but also apply it to yourself and be wildly more successful. Lastly, we're going to discuss risk versus reward and what kind of stuff we can do for mitigating risk and maximizing reward. And then after that, I got a few extra points I want to talk on and discuss as well. There's some kind of quips I want to kind of mention as well. With that being said, lesson 36, the investor mindset, let's get into it. So firstly, we're discussing quickly what kind of money do you have and what kind of money can you make. There's 4 ways most folks in America can make money today, and they break down into 4 boxes. The first is employee, the second is self-employed, the third is a big business owner, the fourth is an investor. I'll put the graphic on the screen. On our left column and in our top left is employee. Most folks, 95% of Americans, fall into the employee section. You're going to go to work and you're going to make money and have a job. Absolutely no problem with that whatsoever. You should have a job to some extent, make some money. Fantastic. Below that, left column, bottom left, is self-employed. Instead of having a job or being given a job, you are creating a job. If you see a niche, if you see a business, if you see a sector that needs something handled, right, you create your own job. That's what I've been doing with my small business with the stock market videos and YouTube videos. I've created my own job. Again, 95% of Americans fall into employee or self-employed. The downside of this column is you're actively exchanging time for money. You'll notice throughout time, the older you get, the less you want to really be at work. Now, if you really like what you do, fantastic, but most folks understand the correlation between I have to get up and go to work to make a paycheck. Most folks in America today wake up, go to a job and actively exchange time for money. That's the whole entire deal. The good news is it's very safe. Most folks feel comfortable. They get insurance, they get a pension, they have a 401k. You have some form of security because the United States and our whole culture is based off that mentality that you can trade your time for the American dream of security. Now, as time goes on, this does kind of change, and that's what the right column is for. The right column, top right, is big business owner. Only about 5%, if not less, own a big business. Most people consider a big business at 500 employees. Now, you could probably argue that 100, 200, 300, 400 employees who are active dictates a big business as well, but the whole entire idea is this. You no longer have to exchange your time for money. You exchange other people's time for money. If you have a big business that is successful, you can leave it for a whole year, come back, and it should still be profitable, if not more profitable. Again, most of my viewers don't have this. Myself don't have this, and that's totally fine. What you do have, though, is the bottom right of the right column, which is investor. This is probably the easiest way most average Americans can go from time for money to money for money, where your money works for you. Of course, if you watch 35 episodes of this, you understand that concept that your money should be working for you more than you work for your own money, right? You should have some stream of passive income and your money should be working for you, almost as the money being your employee. The good side of the right column is that your time is fully freed up. Now there's gonna have to be, again, if you're an investor, you gotta be kind of active with it, or a big business owner, you have a lot of risk you're taking on. But if you do it correctly, your time is freed up to do whatever you wanna do. What a treat. If you have the cons of the side, though, it's risk. You could easily YOLO 100, 200, 400 on margin, millions of dollars into a business or into a stock market and lose all of it. Womp, womp, womp. Definitely can happen. But again, the risk versus reward's obviously there, and those who take risk make the most money. And again, most risks you take on, they're pretty small in comparison to what you have to, possibly give up in the long term. And what I mean is that, would you rather take on some risk to have massive reward or never take on risks at all? Right? Most folks, the first risk to take on is going from the E quadrant, the employee quadrant, to the S quadrant, to self-employed. That's the first major step most folks make. They make their own business. They have a teaching degree like me and make their own business. They have a construction degree, make their own business. You have a HVAC system. You get the idea. And you go from employee to self-employed, right? Most folks do that jump. The biggest jump you can do as an American is this: left column to right column. If you can move from employee to self-employed to big business or investor, you're going to be 95 to 99% better than most Americans in the first place. The reason is, and this is again for 4D chess when folks play checkers honestly, 5% of all income, 5% of all money. So in general, $1 of every $20 bill created is accessible to someone on the left column, which is employee or self-employed. You're saying, hey, of every 20 bucks that the government creates or all the cash flow in the world, I have access to 5% of it. That doesn't sound very great. It gets even worse because about 95% of Americans who work for money are on that left column as well. And so you have 95% of Americans fighting for 5% of the wealth. Does that sound like it's going to work out long term? Probably not. Now again, this is barring someone who's like a lawyer or a doctor with great personal finance. It doesn't really matter. You could be employed your whole life and be very successful. But the fact remains, if you can go from left side, where 95% of folks are fighting for 5%, to the right side, where only 5% of folks are and 95% of the wealth is, that's where your success is going to be found. I'm not saying go start a big business. I'm not saying you have to start a big business. But it's very easy for a small business owner or an employee to dip their toes into investing. Long term, short term, it's where the money's going to be at. Now, there's plenty of commodities, whether it's real estate, REITs, stock market, dividends, even lending money to other individuals. All that stuff's going to be on the right side of this chart. So, before we continue this class mentally, discuss goal setting with your significant other, with yourself, with your loved ones. What do you want to do long term? Because if you wanted to be an employee, which I am as well, I'm not knocking it, you're going to have a really tight ceiling on you on how rich you can possibly be. And then if you want to be self-employed, you can raise that ceiling, but also raise your risk as well. In the long term, though, my personal opinion, I think most